In other news, DBS posted a net profit of $2.82 billion for the second quarter. That's up 1% from a year ago, beating analysts' estimates. The bank maintained its 2025 outlook, saying it's well positioned to ride out uncertainties brought about by changes in tariff rates.
People are looking at new markets to buffer their whatever impact they might have in the US. So I think Q2 was marked by uncertainty. Business people don't like uncertainty. Right? So Q2, we did see people press the pause button. Q3, I think we will start to see people, look at more deals.
DBS points to its growing wealth management business as investors seek safer havens amid global uncertainty. It is also expanding its digital asset capabilities with plans to build on its blockchain initiatives, including tokenized securities and programmable payments. As for dividends, shareholders will get a higher ordinary payout of 60 cents per share, along with a one-off capital return of 15 cents. DBS shares climbed to a record high, briefly touching the $50 mark during the day before settling at $49.75. That's up approximately 1.8%. DBS results round off the first half performance, reporting for all three Singapore local banks. Despite falling interest margins and tariff uncertainties, analysts say all three banks remain well positioned, with one clearly outperforming the rest. Kate Low with this report.
UOB earnings fell 6% to $1.34 billion in the second quarter, missing analysts' forecasts. The bank is also less upbeat about 2025, citing tariff pressures. It plans to raise provisions again as a precaution and has cut its long-term growth forecast.
We are financial intermediary, right? It's not whether I want to trim, I will trim. I mean, end of the day, it's also customer demand. Okay, if customers don't feel comfortable given the outlook of the market, they will slow down, right? So it's the end result of demand and supply, okay? And we continue to chase after the quality loan to start off with.
Across the board, only DBS saw a rise in net profits, while UOB and OCBC posted declines. It also has the highest net interest margin, which is a measure of a bank's profitability. One analyst says DBS is a standout, being the only one to raise its profit guidance this earnings season.
One of the kind of fundamental factors for all the banks has been the kind of secular growth. So this isn't just a quarterly thing. There are quarterly up and downs, but the kind of medium-term growth of wealth management in Asia. And among the three banks, DBS has been positioned, I think, to basically get the most from that.
Analysts say slower pace of growth is expected in the second half of the year, with some pressures on margins due to falling interest rate and slowing loan growth. But overall, they say the sector remains resilient, with limited impact from US tariffs.
The first order impact is very minimal, 1 to 3% of the total loan book. It's the second order impact that the banks themselves are unsure of because it has yet to flow through. So that's one thing that we will need to keep a lookout on, which is the second order impact.
He adds that while credit quality remains steady, slower economic growth could mean weaker loan demand, which would hurt profit margins for banks.